In my last briefing, I mentioned that I was considering a short position. If the price reaches 80k, I'm looking to enter a position right there. The reason I'm bearish is that long-term long leverage is still active at 70k and the market could turn downward to liquidate that leverage. As for liquidity zones, there are two areas that could be considered major. They are 78k and 70k. Assuming the short-term peak is between 78 and 80k, entering a short at the top is much better than going long here as the profit potential is greater. If it breaks 80k, I can just stop out, so it's easy to set a stop loss using that round figure level. Next, let's take a look at Bitcoin options. This week is the expiration week for Bitcoin's April options. Monthly expirations are significant because large option positions are being settled. We can see the market makers hedging zones through the implied volatility levels. If you hover over the top right, the hedge levels appear, and there's a 70% chance the options expire within this range. I've marked the hedge levels on the chart. If it breaks this range, market makers must hedge aggressively to protect their positions and try to push the price back inside. Unless there's sudden major good news, it's difficult to break out of this area. The upper hedge price is 79,236 and the lower is 73,022. But since I only trade at specific levels, I won't open a position until the price hits these marks. Looking briefly at Ethereum, there's significant liquidity at 2,400. Since Ethereum moves in tandem with Bitcoin, we can also consider a short position for Ethereum near 2,400. Ethereum's recent volatility has been decent, so if it enters the 2,400 zone, we need to monitor it very closely. Next, let's look at the dollar and the euro. They might seem unrelated to Bitcoin, but exchange rates drive most asset classes. Just by understanding dollar movements, your survival rate in the stock market increases significantly. The dollar recently hit 100 and is currently in a brief lull. Moving averages are converging, and once this consolidation ends, a breakout is inevitable. I expect the dollar to rise again, and the reason lies with the euro. The dollar and the euro move in opposite directions. If you understand the euro, you can understand the dollar. Looking at recent euro options, a massive volume came in at 1.17 with high trading activity. A position this large can't be made by individuals. It's from institutions or other high capital players. This means there's a side trying to block the euro's rise. If the euro weakens, the dollar climbs, and a stronger dollar leads to a downturn in US stock markets. The Nasdaq is especially sensitive to this, and with the S&P 500 and Nasdaq hitting new highs recently, it's a perfect environment for profit-taking or hedging sell-offs. With the market being unstable in many ways, it's time to focus on protecting your account to some degree. As for current market issues, there is breaking news that fighting will resume if no agreement is reached in the second round of talks. Because geopolitical issues are constantly troubling the market, the point where it turns fully bullish isn't a ceasefire, but when news of the war's end comes out. Please be careful of volatility, and I hope you have a successful rest of the week. Thank you.